the financial centers of the world. This is Bloomberg Markets with Alix Steel and Guy Johnson.
Tuesday, the 10th of August, 3 p.m. in London, 10 a.m. in New York, 30 minutes into the trading day in the United States. From London, I'm Guy Johnson. Alix Steel is in New York. Welcome, everybody, to Bloomberg Markets. Alex, they're voting, apparently, or will be soon.
Yep, the Senate is voting on that infrastructure bill, just sort of the next hurdle, though, into getting all this stuff passed. We're going to break down whether or not it actually gets done later on in the hour. But the market really not paying attention to that today. It's all going to be about that CPI data, Guy, that is going to come out tomorrow. Are we getting closer to Godot? Are we going to see closer movement towards inflation? That's the real question. S&P 500 up by 0.2%, led in part by energy. Crude's up almost 3%. S&P Energy Index up the most. But you could argue that's just kind of a rebound from the correction that we saw in the oil price recently. 10-year yield, that's obviously the one to watch. 132 really broken out of the range now. Give it 10 more basis points, and all you're going to hear about is convexity hedging and the mortgage market. But we're not quite there yet. What is really interesting and what's happening before we get that CPI number is this is the LQD. It's the high-grade bond ETF, and you're seeing that pretty much flat. But yields still really low. Tons of issuance coming into the market right before that CPI number. Kind of get it out of the way first, just in case.
Yeah, for a play you hate, you bring it up a lot.
I do, right?
That one out.
I know, it's weird. I do hate waiting for Godot. Beckett's not my fave, so this is a stressful moment for me.
Yeah, seems to feature a fair amount. The Senate, as Alex says, set to vote on that infrastructure bill. It's going to happen in the next hour. They'll be voting. Session opened about half an hour ago. Kind of how's it all going to work? What are the mechanics of all of this? What comes next? Bloomberg's Washington, D.C. correspondent here with all the answers. Anne-Marie Hordern, over to you.
Hey, Guy. Yeah, well, right now you're seeing the Senate Majority Whip, Dick Durbin, there talking. We just are on the heels of a speech from Senate Minority Leader Mitch McConnell, who said that he is very much so against the $3.5 trillion reconciliation package, which right after we get this bipartisan infrastructure vote at 11 a.m., we are going to move to the vote on reconciliation, on the resolution for that, the framework. And what Senator McConnell was saying is that every single senator on the Republican side will come forward with their disagreement on the Democrats' spending of this package. He cited high inflation as one of those reasons, and he said that they will bring amendments. So it's hard to say what the timeline is going to be because we just don't know. It could be very quick. There could be a few amendments, or as he says, we could see 50 Republicans come up with amendments, and it could take hours. I bring you to a recent memory of March when Senator Schumer now has the record open for one amendment taking 11 hours and 50 minutes. So it could potentially be a short day here or a very long evening.
Yeah, they don't call it Votorama for nothing. All right, Bloomberg's Anne-Marie Hordern, and thank you very much. All right, let's go over to the small business world. You got a really interesting sentiment read. It's my favorite. A sentiment amongst U.S. small businesses owners fell more than expected last month as owners turned increasingly downbeat on future sales in the economy. Bloomberg's international economics and policy correspondent Michael McKee joins us now. It's my favorite economic indicator. Mike, what did we learn?
We learned that we're not as happy, or small business owners are not as happy as they were last month. But this is one of those tricky things. Is it because things are bad or because things can't be good enough because of the supply-demand problems? We fall to 97.7, erasing almost all of last month's gains. That's the headline number here. But it doesn't really suggest a lack of optimism. It suggests a lack of ability to make the money they want to make, because about a third of the people who responded said supply chain problems are disrupting their businesses, and a record number said that they are low inventories. They can't get enough stuff to sell. And on top of that, hiring. We knew this is a problem for small business, and as you can see, we've got pretty much a record share of small businesses saying they have openings and they can't fill them, and almost as many say they're planning to hire if they can only find the bodies, and that's the problem. And then for the Fed, we're looking at prices, and prices that they are charging have gone up. They come back just a little bit to 46 from 47, but that's still the second highest since 1981. So there are some inflation pressures. A lot of it's supply demand. We'll see how small business reacts going forward, and if they can get through this Delta variant and start selling what they think they can sell.
It's interesting, isn't it? It's all like the demand's there, the supply isn't. It's a narrative we hear time and time again. Mike McKee, thank you very much indeed. JOLTS is my favourite piece of economic data if anybody's interested. JP Morgan talking of the labour market, raising the stakes in the Wall Street battle for talent. The big bank expanding a previously announced pay rise to a broader range of staff, basically. Why are they doing this? Why is this important? Shinali Basak here with the details.
Yeah, absolutely, Guy. You're seeing similar raises when it comes to junior staff in sales, trading, research. So you're seeing that investment banking boom that had been reserved for those junior analysts start to make its way across the rest of the bank investment banking division at JP Morgan. As we know, we've been seeing these junior salaries rise at other investment banks as deal flow has been red hot. The first week of August alone is double the volumes in prior first weeks of August on average. And we are seeing that deal flow continue at a breakneck speed here. But you're seeing, even with a waning in trading volumes, that this demand for junior talent is still high. When I speak to my sources, they say that for them, it's about finding talent that also wants to stay at the bank and not just come to the bank to find a job at a hedge fund or private equity firm later on. So nurturing talent is a big deal. There's also a war for consumers as JP Morgan is raising their perks for that Chase Sapphire card. So you see a competitive banking environment all over the place that will float into costs ultimately. So we will see in the next earnings cycle what the outlook will be in keeping those costs under control amid this competitive environment.
Such a good point. We all love that number, and now it's probably going to rise at some point. Shinali, thanks a lot. Bloomberg, Shinali Basak joining us there. All right, let's take a look at the market more deeply here. Abigail Doolittle is seeing how the infrastructure bill, you got business sentiment, and the job market pressures, how they're all playing out in the tape. Hey, Abigail.
Hey there, Alex. Well, so much going on, but not a lot happening for the S&P 500. Up ever so slightly, up 0.2%. That VIX down slightly, so the fear index not very fearful today. Where we do have a big move, though, crude oil up 3.2%. A big rebound relative to the selling that we've seen more recently. Crude oil is down about 10% from its recent peak in July. But again, today a bit of a reprieve. Not so much, though, for gold, down ever so slightly. As for rates, rates are basically flat in the day, too. So overall, outside of oil, small moves on a macro basis. But rates over the last year, you can see the big move down last year and then the back up, which doesn't show great in this chart. But what I do want to point out is the reference line of the 200-day moving average. Right now, the 10-year yield back above that 200-day moving average, Guy, at 1.33%. Should it continue to stay above the 200-day moving average that is sloping upward, it suggests that not only will we be talking about reflation soon, we may, in fact, be talking about inflation, because this chart suggests that the 10-year yield could, in fact, pop back toward 1.5%, maybe even higher.
It's a pretty big move, isn't it? It seems thus far the Treasury market's been ignoring all this taper talk. Maybe we finally see some action. Abigail, thank you very much indeed. Talking of technicals, the dollar index 93.12 at the moment. 93.20, a big line in the sand. We're going to get CPI data tomorrow. If we get a big print, do we go through that? Does the dollar continue to track higher? Mark McCormick, TD Securities Global Head of FX Strategy, joining us next. We'll talk about all of that. This is Bloomberg.
Well, I think that the risk of a tantrum this time is less because people understand the game plan. First, we taper, then we raise short-term rates, and then we start to let the balance sheet of the Fed shrink.
That was, of course, former New York Fed President and Bloomberg opinion columnist Bill Dudley speaking to Alex and myself yesterday on his outlook for the Fed taper. This comes, of course, ahead of tomorrow's US CPI data for July. Talk of the taper, the data that's been coming out of the United States has been propelling the dollar higher. There's the Bloomberg dollar index. You can see the spike to the right-hand side of that chart. If we get a big CPI print this week, tomorrow, do we see that extending? Mark McCormick, TD Securities Global Head of FX Strategy, joining us now. Mark, is that the setup? A big print tomorrow, the inflation data surprises on the upside, the dollar continues to track higher. But what if we don't get that? Walk us through your scenarios.
Yeah, I think that's a good playbook to think about it. What we've seen since the Fed became a bit more hawkish in June is that we've seen U.S. data surprises. When they're good, it's good for the dollar. We haven't seen that for quite a bit of time. because what we've seen generally is good data, good global data has been bad for the dollar because basically it's reinforcing reflation. So I think what we're trying to figure out here is good U.S. data, particularly on the inflation on the growth side, basically helps us navigate a little bit of when we can have some clarity on when tapering's happening. We know it could be September. We know it could be December. We know it's somewhere within that time frame. But essentially, we need to know exactly the timing of it and the exact date. And I think that's what the markets are playing for now. This is what kind of the major theme is. And I think after that, we got to pivot back to reflation, which is kind of why I think markets are very confused and kind of, a little bit lacking conviction at this point.
Hey, Mark, just to pick up on that point in terms of positioning, there's a great chart that we have that shows that hedge funds have been pairing those bearish dollar bets, but there's still more to go. And I wonder how much of the dollar move do you think is fundamental related to the stronger economic data versus just sort of a shift in positioning like short covering, et cetera?
I think it balances both quite well because I think the fundamental for the U.S. is still okay. We're seeing the growth numbers basically peak out at higher levels. What's most important for the dollar, and I don't think it's enough traction, is how the rest of the world story is. We know that China has been deliberately trying to slow its economy, and now it seems like they're starting to move in the other direction where they're trying to fine-tune it to get a little bit more stimulus moving in the right direction. I think, again, on the U.S. side, what's quite important is that related to the Fed is that what we need to see is to have the understanding around the taper environment, but also what is happening around the global story, the reflation story, the global yield curve, which has been flattening aggressively. What we've seen for a little bit of period of time is the 2-year yields have been rising to price in more hawkish central banks. And what we've been seeing is a 10-year coming down, basically pricing in peak stimulus, peak mobility, peak central bank policy, and all those things are now kind of, shifting in a different direction. So I think what will be critical for the dollar is really how the non-U.S. rest of the world growth story plays out, which to me looks like it's going to be moving in the right direction into the fall, which would reinforce the reflation theme in a weaker dollar.
So I want to buy the dollar for the rest of the summer and sell it when?
That's a great question. And I think that's, again, on the positioning side. What we see in our indicators is positioning is a bit neutral. So, again, there's not a lot of high conviction. I think you see there's a little bit bias towards short dollar. So, again, we can see the dollar rally on the tapering decision, which I think is going to be kind of critical as we go through the summer. We've got lighter liquidity. We've got more volatility coming through markets. We've got risk markets a little bit wobbly on the Delta concerns and some of the lockdowns that we see, particularly as people are focused on Asia and China. And again, if we fine-tune the taper as an announcement in September, or we fine-tune it towards later in 2021, those angles are going to be critical for how the dollar trades through the summer. So again, I think as the BDXY, the Bloomberg Dollar Index, is close to the highs we saw in March, we'll probably go through those, revisit maybe 0.5%, 1% higher. Then I think the dollar starts to peak around there, and then we start to move a little bit more lower as we get through September, October, once we kind of fully know the taper liftoff scenario.
So does that leave the euro, in essence, range bound then?
I think so. I think we're nearing the bottom of the range in euro. I think one thing that's absolutely critical that we've seen is the euro is not as heavily correlated with risk as other currencies. So right now, your focus, if you like the dollar, should probably be selling emerging markets. Brazil, Russia, Turkey, some of the higher yielding currencies, and also the ones that are linked to China, something like CNH or even something like Taiwan. Those currencies should underperform as COVID and Delta and lockdowns is a focus in Asia, but also kind of the moving, and as you mentioned before, the momentum of U.S. Treasury yields running higher and pricing in the tapering. That's what's caused a little bit of the stumbling around risk, and that's what can take some of those higher yielding EM currencies underwater for a little bit of time. But when you talk about the euro, it doesn't have the same correlation to risk as some of these other currencies do. So I think in this environment, euro probably treads water around 117. But I think that offers us a good buying opportunity as we move into the fall, especially ahead of the German elections, which could be growth positive for the euro into year end.
Nevertheless, the spread between the Fed and the ECB looks like it's only going to get bigger, Mark.
Right, that's important. I think that's one offset that people have. So if you just think pure central bank policy, Fed, ECB, I think it's clear that you never buy the euro really on relative central bank policy. But there are a host of other factors related to growth expectations, related to the shape of the yield curve, related to equity flows, and also the valuation story. What we're starting to see is euro starting to get a little bit cheap, and our fundamental models are turning a little bit more positive on euro. So our growth factor is long euro. Our yield curve factor is long euro. So that's a sign that, again, you're losing carry, you're losing some of the relative central bank story, but some of these other factors that are still very, very strong performers of the FX market, those things are actually turning positive for the euro for the first time that we've seen since late last year, which to me is a sign I've been waiting for. I've been waiting for the growth story, I've been waiting for the yield curve, and I've also been waiting for equities. And that's a big factor that can help offset the relative central bank story.
Okay, well, you got some of those like you were just talking about. We definitely have the equity story with the European stocks, Euro Stoxx 600 at a record high. Should you be hedging an equity position with the currency?
Well, I think part of it is going unhedged, and that's kind of the way I think a lot of people are playing it. A lot of question we have with people who are purely equity guys are, is there value in the currency? And I think that's a lot of the way that the equity market people look at the currency market, which is, if you look at a currency like Japan or the euro, is the Japanese yen undervalued in the context that I want to buy, sectors in Japan itself or sectors in Europe themselves? So I think a big part of it is the euro is starting to offer some value on a 1 to 3 month basis. So I do think on the equity side, what we would see is, what we track daily is the daily ETF unhedged positions from U.S. asset managers into the rest of the world. And what we've seen basically for all of 2021 is a shift of outflows out of the U.S. into Europe, into emerging markets, into Canada, and into Japan. And I think that should continue on an unhedged basis for most of the people who focus on currency as a driver of their portfolios.
Hey, Mark, so good to see you and catch up with you. Mark McCormick of TD Securities, thank you so very much. All right, coming up, blockbuster moves. Shares of AMC surging after the world's largest theater chain posted stronger than expected results. More on that next. This is Bloomberg.
It's time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. I'm Ritika Gupta. Apple's next iPhone lineup will get at least 3 major new camera and video recording features. The company's betting that will entice buyers to upgrade from earlier models. In addition to the camera and video upgrades, the new phones will have a faster chip speed and new screen technology. The devices are expected to go on sale in the next few weeks. Shipments of China-made Tesla electric cars to the local market plunged last month. Tesla delivered just 8,600 vehicles in China in July. That's down 69% from June. Tesla suffered a run of negative publicity that led to the recall of almost every vehicle the company has sold in China. And Equifax is extending the reach of its business outside financial information. It's agreed to buy prison records business Appriss Insights for more than $1.8 billion. The company has a database of 170 million incarceration records that are used in background checks and numerous government agencies. And that is your latest business flash, Alex Guy.
All right, thanks so much, Ritika. So AMC Entertainment isn't making profits yet, but sales did beat second quarter estimates. The company improved its capital base with some timely stock sales. Dave Wilson is looking at those results from this morning. Hey, Dave.
Hey, Alex. Yeah, I mean, we know AMC because of its status as a meme stock, no question. But, from time to time, it's actually something that you have to hang on to beyond just the movement of the shares. I mean, the stock is down by more than half from a peak in early June. And, we're seeing a bit of a rebound in today's trading thanks to these latest results for the second quarter. I mean, sure, revenue is actually down 70% from what it was 2 years ago, but it was higher than analysts were expecting, at least the ones we surveyed here at Bloomberg. And when you looked at their quarterly loss on a per share basis, it was actually the smallest since the coronavirus pandemic began last year. So, you could argue from that perspective, it's a sign of progress. And as far as cash flows go, in the quarter, about $85 million a month went out the door at AMC. Compare that with $124 million a month, a figure that they cited in March. And they got more than 22 million moviegoers in the quarter, which didn't hurt either. Now, this is a stock that has tended to react positively to the quarterly figures, we should note, because it's headed for its 7th straight gain after an earnings report. And there are some positives that you can point to specifically with this set of results. AMC talking about how it might be cash flow positive by the fourth quarter, and perhaps in a move to appeal to the meme stock traders, they're looking to accept Bitcoin by year end for theater admissions and concessions.
Dave, the apes love the stock. We know that, the retail traders. What about Wall Street?
They don't love it at all. In fact, they don't want much to do with it, frankly. I mean, you've got 9 analysts following AMC, and there isn't a single buy rating among them. 5 holds and 4 sells, and often a hold rating is really the equivalent of a sell, too. So, this is a stock that has taken on a life of its own, as meme stocks tend to do. And so you're seeing that reflected in the share price and specifically the reaction to the latest set of results.
Dave Wilson, always a pleasure. Thank you very much indeed. Bloomberg's Dave Wilson. Alex, still haven't been back to the movie theaters.
No, I have no desire to go.
I haven't.
No, I haven't.
Have you been there, haven't you? Oh, I thought you'd been.
Movies? No, I did the ScarJo one, Black Widow on Disney Plus instead. No, I have not been back to the movie. I think the last movie I saw was like Frozen 2 in the movie theater. Just for perspective.
You saw that on your own, correct?
Yeah, like 3 times all by myself. There was not a 5-year-old involved. But I think that also, I don't know about you guys over there, but here, the hot thing is that whole, like, you get table service, you get a meal, you get alcohol at your seat. I have a hard time wanting to go do that, to be quite frank. If I was just going to sit there.
That sounds amazing. That sounds absolutely fantastic. I don't have a hard time with that at all. But the kind of Friday night family movie thing, yeah, you're not going out to the movies, but you're streaming it at home. That does seem to work, certainly from a sort of personal point of view and an anecdotal point of view. I think a lot of people are doing that. Because it just, you can sit down on a Friday night, you get the whole family, you watch the movie, you can get the table service if you've got well-trained children. Not sure about the drinks, but nevertheless, still works.
Definitely not in my household. But but to the point of how people are going to pay for it, you would think that an AMC is going to want to have some pricing power because they're going to want to get the money. But then why would someone go pay for it? So I feel like there's going to be a push and pull on like what the right ticket price is once things truly, really reopen. To your point, why not just then stay home, pay $30 for the movie instead?
Yep, absolutely. I think we still don't know how this is all going to work. And again, case by case seems to be the narrative at the moment. We're watching, obviously, what is happening down in D.C. pretty carefully. The Senate getting ready to vote on the infrastructure bill. We're going to get more on that story next. This is Bloomberg.
Live from New York, I'm Alix Steel along with Guy Johnson over in London. This is Bloomberg Market. So senators expecting to approve the $550 billion infrastructure package in a vote later today. That's a live shot of the session floor. But the process afterwards could drag on late into the evening. Joining us now, Isaac Boltansky, Compass Point Director of Policy Research. Isaac, there's a lot of nuance here, but first just the plain old infrastructure bill that then winds up going to the House. Do the progressive Democrats in the House torpedo this bipartisan win from the Senate?
Good morning, Alex. The answer is yes and no. The way that it looks right now is that this $550 billion in new spending is going to clear the Senate. And this is a good, solid bill focused on bridges, roads, tunnels, broadband, things along those lines. It's going to go to the House. But the House is not going to take up action on this until they see the final product on the broader budget reconciliation bill, which is supposed to cover much more than hard infrastructure. The White House has described it as social infrastructure. Which everything from pre-K to free community college in part of that package. And so really, we're not going to get movement on either this $550 billion package or the broader package until the fall because of the process around the reconciliation process.
What ultimately ends up in that second part and what doesn't? What does it look like in the end? How big's the number?
So Democrats in the Senate are starting at $3.5 trillion. That is what will pass in the coming days in what's known as a reconciliation instruction process. That's the starting offer. That's where we begin. My assumption is that that number will have to get bid down over time to something closer to $2 to $2.5 trillion in spending. And my basis of saying that is the following. Number one, Democrats need to agree, and the moderates in the Senate, Tester from Montana, Sinema from Arizona, and of course, perhaps the most important Joe in Washington, Joe Manchin of West Virginia, I think are going to bid down that top line number. Furthermore, if we peel back the onion, there's about $1 trillion in very easy pay-fors when we talk about the corporate rate or foreign taxation or capital gains. And my sense is that Democrats are okay with another $1 trillion in deficit financing. You put it all together, and that's where you get your $2 to $2.5 trillion by the end of the year.
What part of that's priced into the market right now? And do you also need to sort of hedge any kind of risk with the progressive Democrats? Because the moderates won't go quietly into the night, but neither will the progressives.
Yeah, Alex, I have to tell you, we are entering what I think is going to be a frenetic and muddled period of legislating, the likes that we haven't seen since 2011, right? We have potentially trillions in spending, tax increases that I don't think are being reflected in the market, the return of the debt ceiling, and a bevy of substantive deadlines at the end of September, mostly tied to federal funding. So, look, I think that it's going to be an incredibly messy period, and I think the market hasn't really focused on it because, look, everything that D.C. has done so far has been pretty ho-hum. But we're about to enter a pretty wild period where we're going to have to follow every single headline out of Washington.
We always do. We always try to. Isaac, you mentioned the debt ceiling. It got left out. How does that get resolved?
Yeah, look, I think, one of my favorite jokes is don't ask a barber if you need a haircut, right? Don't ask a policy analyst if you should be concerned about D.C. risk and policy risk. But this debt ceiling has me a little bit concerned. Ultimately, we will lift the debt ceiling. There's no one in D.C. who wants to be responsible for what would happen if we didn't act. I just think that things have to get worse before they can get better. I think we're going to have a fair amount of political posturing back and forth and scary rhetoric through the month of September.
But what does worse look like? Because in theory, if the Fed wasn't buying billions of bonds, billions of treasuries, maybe, but if you're not going to have any sort of real push in yields or freak out on that end, how do things get worse?
I think that the only thing in D.C. that tends to catalyze action is hard deadlines. And so, look, I think that everyone in Washington is going to play the game up until the end of September when we have the federal funding deadline. And then what we think could be the debt ceiling deadline, which is October/November, right? That's a murky deadline, so it's unclear exactly when that'll hit. But I think the rhetoric, at least in town, has to get worse before we start to see Democrats move. And ultimately, I think Democrats will have to move alone so that they can then amend this reconciliation package to increase the debt limit. Because I struggle to see 10 Republicans who are going to cross the aisle for this in the Senate.
Just very quickly, who's going to be the next Fed chair? I know I've changed subjects quite a lot here, but who do you think is going to be the next Fed chair, Isaac?
Yeah, add something else to what the market should be watching out of D.C. over the next few months. My bet, and I think the safe money right now, is that Chairman Powell will be renominated. I think there's a trade or a deal to be made here where Powell is renominated, which the market, I think, would like. And then the remaining seats, especially the vice chairman for supervision, which oversees the nation's biggest banks, are filled by progressives. And that seems like a deal that could leave everyone happy.
Interesting. That's definitely not one that I've heard yet so far. Isaac, before I let you go, you mentioned earlier kind of the pay-fors and the human infrastructure package, as well as the infrastructure package. What did you make of the crypto tax being kind of thrown in the last minute? The lobbying effort clearly failed to sort of get any soften around the edges there. Where does that leave the crypto industry in terms of legislation right now?
So look, the crypto industry did very well in terms of ramping once we knew that this tax was in the bill and they were up against the ropes. From an advocacy perspective, though, the goal is to make sure that you don't get pushed up against the ropes. And so I think that the crypto industry is going to be much more engaged in Washington. because they're going to have to be, given their size and given the regulatory scrutiny that we're seeing. From a tax perspective, Alex, I think it's important to note that it looks like this language is going through as is. There are some opportunities to change it legislatively, but really I think it's going to come down to how the interpretive guidance and how the IRS regs come through. And that's something that we're not going to have clarity on until probably 2023 when the new deadline hits.
Isaac, we're going to leave it there. A lot of stuff we got through there. Greatly appreciated. Isaac Boltanski, Compass Point Director of Policy Research. What do we got next? We're going to carry on the conversation. More on the infrastructure bill, how the rules on crypto reporting are going to play into the package. As Alex says, it's been a little confused. Paul Prager, CEO of crypto mining company TerraWolf, joining us. This is Bloomberg.
This is Bloomberg Markets. I'm Ritika Gupta, and you're looking at a live shot of the principal room. Eric Roper coming up, Le Bardinan, co-owner and executive chef. That's at 1 p.m. in New York, 6 p.m. in London. This is Bloomberg.
Minutes past the hour, live from London. I'm Guy Johnson, Alix Steel over in New York. This is Bloomberg Markets. As we've been discussing, the Senate blocking a change to cryptocurrency reporting rules. The current language in the legislation basically will require entities such as miners and software developers to report tax data to the IRS, the Internal Revenue Service. For more now, we're joined by Paul Prager, TerraWolf CEO and founder. He's joining us. TerraWolf is building an environmentally sustainable Bitcoin mining facility, which was going to use nuclear and hydropower for its operations. It's going to get caught up in all of this. Paul, great to see you. Thank you for taking some time to join us. What do you make of the legislation? What impact is it going to have?
Well, first off, thank you very much for having me on. TerraWolf is all about Bitcoin and sustainable mining. I think we'll have a couple of bites at this apple from a legislative perspective. I ultimately believe legislation is good. Legislation only serves to legitimize Bitcoin, and I'm excited about its capability to store value. But I do think there'll be a few opportunities here to craft and mold this legislation so that it doesn't deter innovation or, proper reporting and disclosure.
So just one more on that, Paul. From what is going potentially pass in the infrastructure bill, what kind of a burden is that from you short term?
I think near term it could be somewhat troublesome because we just don't have all the information that people are expecting us to want to have the ability to disclose. But again, I think this gets sorted out. I think there'll be responsible legislation, and ultimately I think that's very good for Bitcoin mining and people who buy Bitcoin.
A lot is being made of this recent reports on the environmental impact that humans are having at the moment. We are seeing, therefore, a great deal of emphasis being placed on your industry, as you say, to try and clean up, to try and do this in a sustainable way. Paul, just kind of talk me through what is happening in the industry, what you're doing. There do seem to be a lot of firms making claims that they are mining Bitcoin and doing it in a clean way. How do I separate the people that are and the people that aren't, the greenwashing from the reality?
Sure. First of all, let me tell you a little bit about Bitcoin from TerraWolf's perspective. We're going to have 50 megawatts online this year, 375 next. We have a pipeline of 800 megawatts. Our energy resources are diversified. We're targeting 100% zero carbon emission. We have hydro resource and we have nuclear power resource. So we're targeting 100% zero carbon emission. I think there are some folks out there that are mining using energy resources that they're trying to get to carbon neutral. So they're mining using thermal resources and they're buying carbon credits. I ultimately believe that Bitcoin mining can be entirely sustainable, that it can be all about zero carbon emissions as opposed to sort of creating carbon and then getting even through buying credits. And I think that's where TerraWolf is going to excel.
Paul, one of the main issues in general, just with using renewable energy and hydropower as well, is the transmission lines and the storing and the distribution. how are you going to fix that? Do you have to build the stuff? Are you going to build a plant that's close to a transmission line? How do you cross that hurdle?
So the genesis of TeraWulf was a company called Beowulf. I've been in energy infrastructure for the last 30 years. Bitcoin mining at its core is energy infrastructure. Bitcoin mining at its core is energy infrastructure. You're taking a locally produced commodity in electricity and turning it into a globally traded commodity and store of value in Bitcoin. So from our perspective, from the TeraWulf perspective, it's all about siting. It's all about familiarity with local regulations, governance, and it's about picking sites where you can get the permits, where you have the requisite infrastructure, the transformers necessary to step down that stranded electricity at a very, very good price into what is usable for Bitcoin mining.
Do you think people would be prepared to pay more for a green Bitcoin? Can I tell if it's a green Bitcoin or not a green Bitcoin? And what are the rates of return from generating electricity for Bitcoin versus selling it to the grid?
Right. So I think the answer to that is the miners themselves will ultimately have a cost to produce Bitcoin that must factor into it the energy resource that it utilizes. You know, we talked about legislation and regulation earlier. And again, I feel it's very good for the industry. But when legislation regulation comes, we think it will likely come in the form of what's the energy that you are utilizing to mine Bitcoin? Is there going to be a carbon tax? So we ultimately think that that legislative effort will affect the individual party's cost to mine Bitcoin. We think will be the lowest cost because we're mining with sustainable energy. The second thing is, yeah, I think people can identify who's mining Bitcoin with a focus on ESG, with a focus on sustainable energy. So I think people need to look into the energy resources of the various miners and decide what's important to them.
So Paul, on that, once the Chinese government banned mining, did you notice any influx of Chinese miners? Did that change your operations and your profits? And I ask because it depends on, you know, who's doing it greenly or not. And I wonder if you noticed anything.
Yeah, I think the Chinese migration has had a significant impact here. I mean, at its height, I think we were at 180 exahash. I think it went down to as low as 85 in late spring and summer, and now it's already up to 120. So, there are Chinese mining firms looking for the stable government, stable regulation, responsible regulation that the United States promises. B, more miners are available. There was a short-term shortage of miners. And I think that now they're readily available and they're coming at a better price and at better terms to miners. So I think that's been enabled. And third, with the hash rate being lower, there's an early mover advantage. The people that are mining today or can have mining readily available by year end, I think they're getting a bigger piece of the pie because of the lower hash rate.
Paul, really interesting stuff. Love to see how this develops. Paul Prager, TeraWulf, a CEO and founder. Thank you very much. Let's stay with crypto for a second because the trading platform Coinbase is falling ahead of its earnings release this afternoon. Abigail Doolittle is looking at what to watch for when those numbers come out. Hey, Abigail.
Hey, Alex. Well, shares are weak on the day, but up 20% in the 4 days to today. So overall, it's hard to say what investors are thinking about the report that will be after the bell. Now, what investors are looking for specifically, $2.48 in adjusted earnings on $1.85 billion. Relative to the breakdown of revenue, not surprisingly, most of it retail, 81% retail transactions. And then the next biggest part is crypto asset sales, and then institutional transactions, and there's a small part of the pie, subscription and services. Now, relative to those revenues, I mentioned investors, traders, analysts looking for $1.85 billion in revenues. That's a little bit more than the first quarter that they had when they reported as a publicly traded company. But it's interesting to note that in the quarters that follow solidly down toward 1.3 billion. This could have something to do with the fact that it is a relatively new publicly traded company, so analysts don't have a good sense for how the management guides or what the revenues will look like. But it is worth noting that from this quarter on, analysts have the stock revenue modeled to the downside. Now, speaking of this stock, I was mentioning that it was up 20% into today. This has largely to do with Bitcoin. If we take a look at over the last 4 months of Bitcoin and Coinbase, we are going to see here an orange Bitcoin, of course, that volatile ride. Coinbase going right along with it after the initial pop for its IPO. Bitcoin going higher, Coinbase going higher. Coinbase down a little bit today, Guy, but it's going to be interesting to see, of course, what they do put up on their quarterly report today after the close.
On tenterhooks, Abigail, thank you very much indeed. Abigail Doolittle, looking ahead to those numbers. We've got an exclusive interview. Emmeline Choi, Coinbase president and COO. That conversation, 5 p.m. in New York, 2 p.m. in San Francisco. Alex.
All right, Guy, I just wanted to give everyone the heads up here. We're seeing the NASDAQ now firmly in negative territory, down by about 0.4%. NASDAQ 100 also rolling over. The S&P giving up all of its gains. Yields pushing a little bit higher, so touch of selling on the long end, and some of bid coming into the Bloomberg Dollar Index. I don't know if there was a catalyst for that, but you definitely know there's going to be positioning put on ahead of that CPI 830 tomorrow. This is Bloomberg.
Let's check in on the Bloomberg First Word News. I'm Ritika Gupta. The European Union has decided not to reinstate restrictions on non-essential travel from the US. That's despite new COVID cases in the country exceeding the bloc's threshold. The guidance from the EU is non-binding. The government of each member state can decide whether or not to follow it. The U.S. coronavirus wave that started in low vaccination states in the Ozarks and Deep South has now engulfed the country. Cases and hospitalizations are at their highest since February. 38 states have transmission levels considered high by the CDC. The other 12 states and Washington, D.C. have transmission rates in the second worst category. And for the first time in decades, American workers are, well, calling the shots. Companies such as Kroger, Under Armour and Chipotle are pushing up hourly wages to try to retain employees. Others are offering hiring bonuses. The result, workers are scoring the biggest pay hike since the early 80s. Wages for the leisure and hospitality industry have risen at an annual rate of 6.6% the last 2 years. Alex?
All right, thank you so much, Ritika. So, Guy, the other story that we want to be following as well is what's happening with the wildfires over in California. So the Dixie Fire is still raging, not yet under control. It's already leveled some towns. There was a fund that was supposed to be about $21 billion that would prevent any utilities from going bankrupt ever again due to any wildfires. There's only $10 billion that sits in it right now. Some estimates are already the damages currently from the Dixie Fire are like $1 billion. So that money can be depleted really quickly. And once it's over, then what happens? How do you come back from this? How do you replenish it and survive when you know that at least in the U.S. and California, not to mention elsewhere, the wildfire season is getting longer and longer every year?
It's a problem we're facing here in Europe. You look at what is happening with Turkey, you look at what is happening with Greece. It's been a really bad summer. And as you say, we're not done yet in terms of these fires. This is something that we're going to have to get used to more and more often. Trying to manage it from a utility point of view, I think, is going to be an absolutely enormous challenge. Not only, as you say, from a liability point of view, but also just from a maintenance of service point of view. This is just going to be a huge challenge. There are other challenges as well, Alex. Coming back to that kind of ESG question we were talking about just a few minutes ago as well. We were talking about some of these funds are using offsets. They're planting trees. They're doing other things. Some of these trees are burning down now. How do we manage this from this point of view? It's a huge challenge. Offsets don't work if we're going to have these kind of wildfire events.
That was my point. I was going to go right to that. That's why I love anchoring with you, because we're of the same mind sometimes. And one might say, like, sweep that aside, but if you talk to the likes of BP, and I have the CEO Bernard Looney, I've asked him, like, okay, carbon offsets, planting trees, like, come on. And he's like, I literally can't do anything else yet. Like, we're going to eventually transition to, you know, wind and power and sell down our assets. But in the meantime, I have to plant the trees if I'm going to meet the goals. There is no other option. In which case, what do you do if they're burning down?
Absolutely. It's a problem the airlines are facing as well, because you haven't been able to scale at this point sustainable aviation fuel. Like, it's a feedstock issue,
Yes.
it's a policy issue, it's a technology issue. So we're not there yet.
Yeah.
Ultimately, that may be the direction of travel, but again, even that is maybe a temporary solution.
Like
So
this.
A huge problem
We're like
in
this.
terms of figuring this out. Maybe, sometimes. European closes next. Goldman Sachs significantly upgrading its forecast. Sharon Bell's going to join us next. This is Bloomberg.